We're going to pivot now and talk about Tesla. Shares up again this morning after two bullish calls at Bernstein and Morgan Stanley. Tesla stock up about 100% year to date. And our guest host, Cathie Wood, is not surprised. 2 years ago, right here on Squawk Box, she said, had this to say about Tesla.
This stock, in our models, this stock is going to 4,000.
Cathie's upgraded that to 7,000 now and is the biggest Tesla bull around. Cathie, firstly, because, of course, we always push negative and positive analysts, as we have with you in the past. Congrats, because you've had a great year off the back of this.
Yes.
What do you think accounts for that 100% or so gain, when you see how people have talked about it differently today versus a year ago?
Okay, well, first of all, I have to give credit to three of our analysts and our director of research for the kind of research that has given us this $7,000. The 100% number, I believe, is very much a function of what has happened in China. First of all, profit numbers that way surprised expectation, free cash flow numbers that completely shocked people, but also Shanghai up and running within 1 year for $2 billion. I wouldn't be surprised to see more plants going up in China for that reason. And the reaction of other auto companies now, they are scrambling. Many people ask me the question, well, wait a minute, these auto companies have R&D budgets and capital spending budgets that could run circles around Tesla. That's true. They have been focused on the internal combustion engine. They have the wrong DNA. They don't have the right kind of software developers. They have mechanical engineers. They have great engineers for what they do now. But what they are trying to do, leaping from the internal combustion engine to electric, is very hard. And we are now seeing, and more people now believe, that battery costs are falling at such a rapid rate that within 2 years, the average electric vehicle, from just a sticker price point of view, will drop below the average internal combustion engine car in price. Already today, total cost of ownership is lower. And I do believe that's one reason that demand is taking off here.
Let's talk about the China point a little bit more. Both in the short term, how worried are you about the coronavirus impact, but also in the medium term, because we've discussed this as well with Mohammed earlier, about more companies wanting to rely less on China because of potential volatility from whatever the issue. But you think that the opposite is true for Tesla?
I think the opposite is true. If you listen to Elon Musk, he says, I wish our mayors in this country were as tech savvy as the mayors of the average Chinese city. They understand what we're doing. We're not an auto company. We are a technology company, battery company, a transportation as a service company with software as a service like margin. So the Chinese get that, and they, for their environmental reasons especially, they want to proliferate it. We just heard today that CATL, which is one of the largest battery manufacturers in China, is going to be working with Tesla to eliminate or minimize cobalt, which is one of the most expensive parts of the battery. So China, from an ecosystem point of view, is all in for this movement. And I think Tesla would be fine not only fulfilling the Chinese consumers' demand for Tesla, which is a status symbol,
they might build a few less coal plants over in China, I guess,
yes.
But they don't seem to be thinking about that. Let me just ask you.
So nuclear is where they're going.
You got a $7,000 price target, so I would think you'd never sell any Tesla, but people go crazy when you're on with the Twitterati are bonkers. Anyway, there's both positive and negative people that follow, and some are always talking about you selling a third of your position or selling this, selling that. Why would you ever sell any, and have you sold any?
So, yes. We can only buy up to 10% in our portfolios. So it's for how much? It is still 10% of our portfolios. You're going to keep it as much as you can buy. You're going to keep it, and when you sell, that's the reason. That's the primary reason we sell. Primary, there are times if it's up 50% within a few days.
Well, if it's going to 7,000, you should never sell.
I'm a portfolio manager. Something else is down 20%. Tesla's up 50%. I am going to make those sorts of moves. But Tesla is our largest position.
But your other positions aren't going up 10 times in value. Why would you ever sell to get into what other position could possibly be more valuable or more positive about than Tesla?
Well, again, having been a portfolio manager for years, I know there's always another side to the story. There will be another controversy when it comes to Tesla. And what I want to be able to do is when that controversy comes around and the stock drops to 8% of our portfolios, I want to have the room, the latitude to buy.
All right.
But can I just say one thing? What's so interesting in this whole period is that the sell side, if you look at the buy and sell ratings, the number of buy ratings has gone down as the price has escalated, the number of sell up. So 7 buys, 18 sells. And even those price target increases, I bet they weren't associated, or I don't think they were associated with an actual upgrade. So what we have here is a wonderful wall of worry, the best wall of worry I've ever experienced in my career with a stock or with the market.